Hey guys, Apex Trades here. I hope you are well. I want to come on today more to kind of show how I've been mapping my supply and demand zones. I'll give you a little bit of an overview about how I trade. I created like a full 6-module video in my Discord server all about how to kind of map market structure, how to understand which direction we expect the market to move. And so just join the Discord server if you want to get access to that. Just as a quick caveat on Discord, the way my security works is if you only have an account less than 5 days old, it will default you to not be able to get access. The other thing that I notice a lot is when people do try to join, they don't put the characters in right, and so it's all case sensitive. So it's like 6 characters. You just have to follow the guidance, and you'll get access to the server. Should be quite easily. So, right, okay. So let's just a couple of things I want to define. When I'm looking to create market structure, what I oftentimes do is try to distill it into 3 different time frames. Right, there'll be a lower term time frame, a medium term time frame, and a higher term time frame. Now, the way in which I decide on which ones filter into where is lower term is anything up to 60 minutes, so 1 hour, and then anything between 1 hour and 24 hours or a day, I will classify that as medium term time frame, and then anything above a day would be higher term time frame. And so what I tend to have on my charts is I'll have lower term time frame market structure, swing points, medium term time frame market structure, medium term time frame swing points, and then higher term time frame market structure or levels, and then higher term time frame swing points. So if I'm on any time frame up to an hour, you'll see if I go on my swing points on my market structure, so I will have mapped out where are the swing points, where is market structure, where have we had a break or a trend change, and then where is the current swing points in terms of the high and low. What would we perceive as strong, and what would we perceive as weak in terms of where we'd expect price to go to. So all of that I'm not going to cover on this session. That's simply because I've already covered that in depth in kind of a 6-module training course for the guys that are within my server. So again, if you want to get access, just simply head over there and hit me up. What I really want to focus on today, though, is how do we identify where the supply and demand zones are. So oftentimes and I've done this myself, by the way, but I've realised there's a much better way to do that. Usually the way we would define, an area for supply and demand is based upon, so we get this fair value gap here, right, which is that move to the upside here. I'll just bring this in. So you can clearly see between the wick of this candle here and the bottom wick of that candle, you see this gap here, right? So that gap, that's the fair value gap, right, for that area. Now, how I would previously define where the supply area would be for this area, or the demand zone rather, where people would buy back in again, would be usually the first candle you would just define on whatever time frame you're looking at, or it could be a specific range, right? And this is the problem. This is where a lot of kind of, let's say, guesswork comes into it, right? Because a lot of the time you're guessing roughly where you think, the markets would come back into. So as you would expect here, you'd expect price to kind of maybe come back into here, hit the supply zone or the demand zone rather, and then start to move up again. But from our perspective, when we're trading, whether we're trading intraday or, whether it's just day trading, sometimes this zone can be quite large. I mean, we could say, well, maybe is that the zone, and then that becomes a really wide zone. And then what you're looking to do then is to scale into your smaller time frames, like your 3-minute, your 5-minute, your 1-minute, whatever, and wait for that kind of market structure reversal, right? And that's fine. But sometimes you're not in front of the chart and you don't get access, and for whatever reason, it becomes a lot more tedious to trade, specifically if you don't have the time, right? And so one of the ways in which I've looked a lot around how we can define quite accurately actually these zones is to not use TradingView but to use order flow. And so what you're looking at here is order flow, right? So this is exactly what I'm looking at in terms of how does price move relative to an order book, and how do we move in terms of where demand comes in. Now, what you're looking at here, as a quick overview, is essentially, this is a candle, right? You can see this rather large candle here. You see these little green boxes that kind of fill in here. This is what we call imbalances, right? Or where there's a disproportionate amount of buys to sells or sells to buys, and they operate diagonally, right? So, for example, if I zoom in a little bit here, on this particular order, you'll see that that's 599 versus 132, right? So that means that if there's more than 300%, or there's 300% more buys than sells, it will highlight as an imbalance, right? And so you can clearly see, there was only 132 sells to 599 buys. Here there was virtually no sells to 178. There was 78 sells here to 211. So that's where we create a natural fair value gap, right? That's an imbalance. So this tells you specifically where on the candle itself where the imbalances are. So rather than just saying, okay, let's just scoot back to here as an example, and we mark this whole zone out as the imbalance. Well, it's not strictly true, right? Because in this candle alone, there's imbalances. There's imbalances within that larger imbalance, and so number one, it's really good for understanding where are the imbalances relative to that specific candle move, right? The other thing that I like to do, again, this is all to do with, how would I describe it? Understanding how markets move, right, and why. I've always thought, okay, so Bitcoin, right? It's the king of crypto, and for many reasons we think crypto is this savior of money, right? Well, if that was the case, why isn't Bitcoin already at $1 million per Bitcoin, as an example? And it's simply because it's a tradable asset, right? And that means that market makers have to provide, or liquidity providers have to provide liquidity at all levels, but they're not just going to allow price to just moon, because no one makes money, right? Or they don't make money, and so they're the ones that are always providing liquidity at every single level. So that's why price never just moons, right? Sometimes it'll just shoot up, a news event, an ETF's going to get released, whatever, but then it's fake news and some price comes back down. But it's always about finding liquidity, allowing tradable assets to trade at where markets are more liquid, and then bringing price back down into another area of liquidity. And it's always this kind of movement, but particularly on this one here, right? So this is always what I like to see, because for me, what I'm looking for at the top of this candle, right? This is buyers. This is a huge host of buyers all coming into the market. Buy. Lots and lots of disproportionate buys that occurred at the top relative to the sells that occurred here. Now, what happens here is when you see that, it's usually symptomatic of exhaustion, right? So prices keeps pushing up, but then of course, clearly what happens is price absolutely slams back down again, and then all of these people who have bought at the top are now in pain, right? So price hasn't continued to go up, so these are all now probably over leveraged, probably in a position where they've hoping that price is going to continue up because they think it's Moon City. And so what you'll tend to find is the market will then look to liquidate those positions. It doesn't always happen instantaneously. I mean, sometimes it depends on where the move was. I mean, again, here you can see huge amount of disproportion where you've got a lot of active buyers buying in at the top. This did result in a rather large liquidation event, I think. Yeah, you can see here, these are all the liquidations. So that green liquidation candle is all of the long liquidations. We also got that same long liquidation here. But sometimes you don't get that liquidation event that occurs instantaneously. And when you see that in the market, I don't know if I can bring it in. Let me see. Let me go to auto a second. There was a particularly interesting one where price moved up. Let me see if I can find here. Right, so that circle. So price, you can see here when price absolutely volleyed up to the top, there was virtually no liquidation event, right? And so for me, that's a perfect opportunity to short. And the reason behind that is because no liquidations have occurred yet. Now, liquidations, obviously, if it's a long liquidation, they convert into short orders. If it's a short liquidation or a short squeeze, they convert into long orders, right? And so from a central exchange's perspective, all they're concerned about is, number one, creating orders, because that's where they get their money. Market makers, they get their money from the spreads, right? So they're always actively trying to participate in getting orders as well. So it becomes this kind of very beneficial market to constantly hit orders up, whether it's a liquidation, whether it's a stop loss, because effectively they are all just orders. They are either buys or they are sells. It's as simple as that, right? And so when you see this with the very low liquidation levels, because all of the people who were trapped at the start, at some point, it's not, well, that you just know, because there's no liquidation event, or a very small proportion of liquidation events, that price is probably going to want to come down and liquidate those longs at some point, right? And it's exactly what happens. Then you start to see the liquidations coming in here. Bang, liquidation comes in, which liquidated probably the guys that were still holding here, hoping for a Hail Mary for coming into the market to push price up again, right? Now, I went a bit off topic because I just thought the power that this gives you and helping you understand order flow from the perspective of not just looking at candles is really understanding where momentum's going. How do we define where, for example, you know, that there's keenness in the market, and moreover understanding where specifically the potential reversals are, right? And so if we look, I mean, what we're trying to identify is, for us, where, like, you see this is where you see a lot of active buying and selling, right? So price comes down, we see a shit ton of orders that came in here, highlighted by the heat map, in the sense of the bigger the order, the more deeper color, whether it's green or red being sells, greens being buys. And you don't even need to look at this. I just know that's, you know, orders of magnitude. I mean, that's 1.1k worth of Bitcoin sells and buys that have both occurred in that kind of region. So we know instinctively, without needing to know, where's the supply and demand zone. That is effectively a supply and demand zone. So you could map that out, right? And you could say, okay, well, where is that zone? So that zone is here, right? Now, you know, where do you have your stop loss? Well, that's always going to be a bone of contention, but you've got to remember, this is where prices come down, it's come back up, and it's kind of starts getting respect here, because you've got to remember, it's always about protecting that order, right? Whether I'm buying or whether I'm selling, it's where there's going to be protection of that order, because clearly that's a lot of capital that's came into the market at this point, right? Specifically where you see that's a real tug of war, buyers and sellers equally. So we know that where money comes into the market, that zone, that specific area is going to be one that we want to keep our eye on, because we know there's no guesswork, right? It's not like, is this a supply zone? Is this a demand zone? Doesn't matter. We know it is, because that's where orders came in, very big orders in comparison to the rest of these. And of course, we don't know, like, I can say with very high probability that if I'm longing after this move down here, and you're also seeing people who are shorting, there's a high probability that it's going to range somewhere from 10x, 25x, 50x, 75x leverage. And so that basically means, you know, wherever their stop losses are going to be, could be down here, you know, could be wherever that, you know, again, and I can show you how we can map that out with the liquidity hunter. But, you know, you've got to think to yourself, where do I want the zone to be? Do I want it to be bang on where the orders are in terms of, you know, this representation of where the orders came in? Do I want to give myself a little bit of breathing room? At what point do I consider that actually, you know, there was more sells, even though that this became a very interesting area to get into? There was certainly, you know, was there more sells or more buys within this area? You can look at net longs versus net shorts to figure that out. But I mean, if we just look and eyeball it, you can see 1.7k worth of sells to 1.4k, because obviously it's diagonal, right? So sorry, that's 956 to 1.7, 1.5 to 1.4, 1.4 to 1.2, 1.3 to 1.7. So it kind of feels like it's evenly balanced, right? There was no real winner who came out on top there, but we know that's where the capital came in, right? So from our perspective, at this stage, you're like, okay, it's an interesting area. We may come and revisit that at some point. You know, how do we understand what we're going to be doing there? And if you kind of move this along here, clearly it wasn't a zone that was respected, right? But it's still a zone that we would classify, or me at least, I would classify as where money came into the market. That would have been a failed move, because if you would have went long, yes, you might have got, you know, a small move with a decent enough stop loss up from what, let's say, you know, so price comes back up, this huge candle here brings us back in, and then we stay within this demand zone, we break out of it, but then we come back up again. But then clearly what you see here, right, and this is a good indication again as a kind of educational point, where this candle comes in, you know, we're starting to see imbalances come in on the buy side, right? So that's usually, okay, we've had huge sell-offs, we've kind of lollygagged around this supply and demand zone, but then the buyers have really stepped in because sellers have not been able to push it down any further. So we know instinctively that this is going to be something that we want to look at in terms of where to get that order in. Now, I would probably, for me, the way I would think about this is when I start seeing them imbalances occur, this is on the 30-minute, but when I see them imbalances occur at that level, I'm starting to think, okay, interesting, buyers are stepping in. This is the first 30-minute candle where we've seen some good imbalances, because even on here, by the way, we only seen one imbalance. So that's what that means, is it's relatively evenly matched in terms of buyers and sellers, right? But obviously there's more aggression to the buy side, which means that the candle went up, right, relative to the order book. When we've kind of lollygagged a little bit and come back down, again, we've seen some imbalances here, but it wasn't enough to push it back down here. This line here, by the way, is where resting orders or buy orders was sitting on the order book, which was enough to absorb that move back down, and then prices come back in again. So I might have taken an order on this, which would be classed as a demand zone after the sells have come in, and then that would have still been a nice, decent move. I mean, what did that go to? Say you got in at the start of that candle, so you're looking at 27,101. We went up to 27,322. Not the biggest of moves, of course, but still something that was worth looking at for sure. Then eventually, obviously, markets do come down and break through that demand zone. But then look, we have a new set of zones here, right? So it's the clue, right? We start to see imbalances. Always when you see imbalances at the base of the candle, as in the start of the candle, really should be thinking of continuation to the downside, because that's normally the market maker pushing that price down, right? Doing a, let's call it a sell to buy move, where he's propagating the move, pushing the price down to start marking up as longs, because he's expecting that price is going to come back up eventually, right? So this is just how markets work. They provide liquidity, but at the same time as providing shorts, so everyone can provide the shorts, yeah, to sell. That also convert, that they are effectively their longs, right? So they're long when you're short, and let's just say. And so what happens then is we get another interesting zone here, which we can mark on the charts. Again, I'd probably say from here to here, and then we'll move this along. Let's see how this unfolded. So I would say buyers outstripped sellers here at this point, but price still pushed down because the aggression was still too strong for the buyers, right? So price continued to push down. Went as low as 26,525. Price comes back up. Don't see too much by way of imbalance at this stage, but you can clearly see in this zone again, if we have a lot of buyers and sellers kicking in, then we have another nice disproportion there, and then price starts to move up. Let's go more recent. Like you can see here, from a liquidity perspective, so we've got all of these. I'll tell you what, a better way to do this, right? Let's just bring this in where it becomes more clear, right? So what happened previously here, we had this huge move down, and then push back up. This was the area where a lot of activity happened, right? It's actually easily more definable on a bigger zone, right? But it's obvious at this stage, right? So think logically what happens. We have a lot of tug of war going on at this stage. Price continues to move down. Clearly the order book was relatively thin, and price pushed right the way down. When price eventually comes back up, you get some imbalances here. Price starts to come down. That's your clue where you see them imbalances. That's them orange blocks there. You get more kinds of force within the market here, where we get a lot of buyers and sellers evenly matched. But this is the point at where we bounce from, right? Because this is the area where a lot of money came into the markets, trying to protect the capital, right? So the buyers, the people who have bought at this point, who haven't taken profit at the top, are now starting to try and buy again, right, to protect them orders that came in here. And so they actually win, obviously, of course, for a short period of time. They push price up again, then they push it below this area, and then new orders come in, and this is a combination of both breakout sellers who were trying to short the market and protection of those longs who was long in here and here, right? But effectively what happens, huge dump, right? Didn't win out. A lot of traps, buyers who were trapped from here is now being probably liquidated, right? Even though it's small liquidation in relative sense, those still occurred there. But when you look here, that's not as strong. So we're only looking at the 30-minute, right? We were only looking at the 30-minute prior to. So that's, when we look at that, I'm going to delete that because it's not as strong a zone. Like, what is a much stronger zone? You can see here. This is a perfect example, right? So that is the zone. You can clearly see huge tug of war event that came in at this point. And you can just see along this zone that this is what we would call that supply and demand zone, right? So it would be a demand zone. Clearly it was a good demand zone because the effort that it took to push that down. Again, when we come back into the zone, you can see here where we had the order flow come back in for buyers has effectively pushed the price up again. And then this is where, you know, whether you enter here and have a relatively good stop loss, or whether you wait for price to come back into this zone. Now we've clearly defined that this is a zone based upon obviously where large buyers and sellers came into the market, depicted by the heat map on that actual candle, is a much more perfect way to get in. You'd also argue, actually, you know, when you're mapping these out, that is clearly another strong area, right? Clearly a strong area where there are buyers and sellers within that market. And again, you know, price comes up, we start to see more areas, right, where you would expect. So this is just a case of saying, okay, well, where else would I want to map that zone? Well, you got some nice disproportion here, so it's not the best way. But again, if price wants to, now we've established a move to the upside. This is, by the way, this is where market structure comes into the fore, right? Because when you are in a bullish trend, is it the right idea to start shorting or hoping to short here? Probably not. So I would not want to look at shorting this, because market structure tells me that we are currently bullish, right? And so I would probably do one of two things. Number one, you've got two zones. We've got this zone here, which we'll zoom into a second. Right, think of it logically. We have trapped initially, which were trap buyers. Price comes back down, didn't do any liquidation event, so that's fine. So those guys got a relief there because they didn't effectively get liquidated. But huge imbalance on this candle, right? That's a good clue that price is starting to really build, and the price was built from the base, which you always want to see. If price builds from the base, now obviously we're on a 4-hour candle, this is medium term time frame market structure, price is going to continue to the upside, or should be relatively inclination of that. This is where we got a lot of the shorters trying to, basically the guys who were protecting themselves here, who went long, and they're now trying to trap them by trying to short the market down. That didn't happen. Obviously this was the news of the ETF, that was completely fake, and then price came up, but no real imbalances at the top here. to really, I don't think any, oh yeah, we do actually. We have a shit ton of imbalances here, but we also got hugely liquidated at that same time. So those guys who longed at the top will have absolutely now been flushed out of the market. So this is like, when I decide, is there a probability that price can still come up to these zones? Well, the answer for me is absolutely yes now, because number one, we got a flush out, so we liquidated probably all of the guys who were at least at the top of here will have been liquidated, as well as you can see the open interest really came out of the market. That's where money was leaving the exchange. Right now, this is Binance's exchange, by the way. And so, you know, there's a higher probability that price can continue to move to the upside. And so what I would be doing now is looking at those particular zones, right? Where does price want to come back into? Well, that's obviously what we don't know is did they take money off the table at this stage? The answer is I don't know, right? I don't know how greedy people have been. You know, open interest could tell you that profit taking might have occurred. But I probably think that's more of a liquidation event here than a money off the table kind of event. And so you can see we've got some nice zones here that have been tapped twice actually. So this candle came in, tapped it, price moved away, come back down, tapped the zone again. Now the reality of this is really clean and easy to see, because we know where pressure comes into the market, specifically where you're getting them nice heat map colors here, where you're getting a lot of proportionately higher volume at this stage, and also the fact that we've got a lot of imbalances here tells me quite easily, without even having to like second guess myself, whether it's like looking at, you know, fair value gaps and everything, that is clearly a zone where it will get defended. And it got defended twice, right? It got defended here, and it also got defended here. Now, because I think I'm expecting price to continue up market structure wise, right? What I mean by that is, you know, if I go, that's the low, we're on the lower term time frame at the moment, but if I go even to the, well, let's just stick to the lower term time frame at the moment, right? Where do where relative to here, if I map this, right, what are we looking at? That is that candle there. What are we on? We're on the 4 hour here, right? So I want to just move that out the way. I want to move that to the 4 hour, and it was the candle, not this candle. Oh yeah, it was that candle, right? That's that huge. This candle here is that candle there, right? But I'm looking at this area here where we got the imbalances, which is essentially the top of that candle. So we had the big candle there, we have this candle here, so I know that this zone here, roughly, right, you know, from my perspective, that this would be a really interesting zone to go into. The only problem being that on a shorter term time frame, we would have to break the strong low, and so theoretically, you know, that can happen. That would what we'd class as a liquidity grab, right, or a sweep. But if I'm looking at where I want to long from on the expectation of the continuation of a long, that's the zone, right? That is a perfect zone, because we've got imbalances. The other area, by the way, which would be a way in which we could navigate away from that, is to have this zone here, but we've already tapped it, right? I don't know how far we'd want to bring that down, but we can clearly see in this area we've got a lot of kind of higher volume that came into the market, specifically around that 28,500 mark, and then we got a lot of good buying that stepped into the market here again. And so this zone would also be classed as a way in which I would probably consider. What I'm doing here is I'm taking the whole zone, right, because there's a lot of buys and sells that came in. So that's roughly around, what candle? 1, 2, 3, 4, 5, 6, 7 candles in, right? Let me just bring this in a minute. 1, 2, 3, 4, 5, 6, 7. So it's around kind of the base. 1, 2, 3, 4, 5, 6. It's around the base here. Now that would technically keep us still within bullish market structure, but price could come back down and then break to the upside. So again, you can see again it's reacted really well, right? That in itself was an order block. It's where price comes in, the price of Bitcoin comes in. There's a lot of kind of tug of war going on, and someone eventually wins. Now, usually, if someone wins, then that means that buyers if buyers win, then buyers are going to want to protect those orders, right? And so theoretically, we'd expect that price could come into here before again breaking the week low, or the week high, apologies, and then price continues to the upside. And so the whole point of this really is to show that you don't really need to guess, right? You don't need to guess where these supply and demand zones or order blocks, call them what you want, are, because you just look at order flow, right? Order flow will tell you exactly where these are. They'll show you where the imbalances are, so you know exactly where your fair value gap is, and you know exactly where your order blocks are. Those areas within the candle, not the whole candle, just the areas and zones within the candle that define for you where your area is, where you expect a reaction. Now, if you play the game for the long time and you're not just someone who's looking for a quick win, then you'll always use your the approach of just good risk management, so that, okay, you know, we expect price to come into here and then bounce. Okay, I'm going to risk 1-2% on my trade, go for the 3, 4, 5 to 1 risk to reward ratio, whatever your kind of threshold is, relative to that proportion, right? Whether it's 1%, 2%, whatever. If it fails, okay, it fails. Was your rationale bad? Was your thesis wrong? Okay, your thesis was wrong, but the way in which you approach the markets was absolutely right. You know, you're not thinking about support, resistance, fucking MACDs and whatever. What you're actually looking at is price action. Where is the money within the market? Where the price come in? Because we don't, that amount of volume there, by the way. Look at that. That was 2.1k, 1.9, 2.1. That's a mass amount of long orders that have come in there. That's Bitcoin, remember, right? So of course this will be leverage based, but think of how much transactions occurred there. What's that? 2, 3, 4, 5, 6, 7, 8, 9,000 Bitcoin. Well, do the math. What's that? 9,000 times 28,500. I mean, it's orders of magnitude, right? It's millions, multiple millions, and so it's a lot of money that's come into the market, and that's probably not going to be retail driven or just retail driven. And so the whole point about that is, looking at where money comes into the market and saying, okay, what's the likelihood or probability that will be defended? And it's probably quite high, right? Because you want to defend your position. So that's the whole point. It's just not second guessing. It's using actual data from order flow to show you where those zones are. So I hope you enjoyed this one today. As I say, my Discord server is open. We have a lot of really good guys in there. We have our own suite of indicators. There is sections that you can join as a VIP to get more in depth on this and understand market flow and order flow, and not just order flow, but also looking at market structure and relative strength within that market structure, about expectancy of where you think price will go, both on low time frame, medium time frame, and high time frame. When you piece it all together, kind of gives you that framework to operate within, right? So that's all I've got today. Link should be in the description if you guys want to come over and take a look. But that being said, have a good day, and I will speak to you guys soon.